Welcome to the Best of U.S. Investors, Two Regular Guys show. This is Mark on this side, and I am Trent. And today we're going to go on into the paradigm shift that we're seeing in the stock market, caused by the unfortunate situation on Saturday with the attempted assassination attempt towards President Trump. We're now seeing, along with Fed lowering rates, at 100% chance by September, gold is hitting record highs, yet markets are not the economy. The economy is not showing signs of good things. Those are the subjects we're going to get into, so let's get rolling.
Well,
okay,
here we
Mark.
are again. Here we are again.
I am fired up today, Mark. Woke up.
How things change in a little bit of time. And I always say in swing trading, I try to exit my positions before a weekend or a holiday because things can happen over a weekend when the market's closed and it can affect your stocks the next day. And such as what we had last weekend with the attempted assassination of the former president. Okay, had that gone a different direction in a millimeter to the right, we may have seen markets dump. I don't know. But instead, the market got out of that's pretty much, from what I've read, okay, in my opinion, that pretty much sealed the deal for President Trump to win the nomination and the election. Okay. Yeah. And from what you read on that is the market looks at Donald Trump as saying, I'm going to reduce regulations. I'm not going to increase taxes. Okay, it brings money back into the economy. And the market takes that as being good. And the double whammy is starting last week, we saw some of the inflation data, and we've gone over those reports, and we know that they're not really what they seem, but that's what we use, with the talking heads. And Jay Powell's out there talking about, well, we don't quite need to get to 2% anymore to start lowering rates. And like you said, now you're seeing, I don't know how they can predict 100%, that it's going to happen. I don't know who does that. No one can predict 100%, but if that's what they say, that's what they say, But with that, the markets are off to the races, and not only just the markets, but the whole market is kind of off to the races, which is kind of different. I'll show you. We always look at this chart.
This is no longer. It's interesting to back up just a little bit.
Go ahead.
Our economy has been tanking for what? It was boosted by free checks in the mailbox checks after the pandemic. That money dried up. Interest rates have gone through the roof. Business policy has been very restrictive, and we're seeing companies doing less business. And then you have this election this year, and you're seeing there's this back and forth, who's going to win, who's going to win, who's going to win. And then we have the unfortunate, really sad event on Saturday with the attempt on President Trump's life. And all of a sudden, it's like it cleared the board and said, he'll be our next president. And all of a sudden, markets are looking at this going, and you're going to point out here, it's no longer the Magnificent Seven or the Magnificent Three that's pushing the S&P 500. It's now the broader market.
Yeah. And don't even forget, we still have inflation, okay? And we're still printing money left and right. And so that we're still devaluing our dollar, and we're still losing purchasing power by that and inflation. But the markets don't care about that, okay? They care about, the future of the markets. And here, we looked at this chart, we've been looking at it for a couple of weeks, where the weighted S&P 500, which is mostly 37%, we said last week, the top 10 stocks in the 500 have been going up. Well, now you can see what happened this weekend. And this week, this is when Jerome Powell started talking about, 2% wasn't necessarily the goal. And then we had, the assassination attempt on President Trump. And you can see that the equal weighted S&P is now rising at the same point. It's, instead of diverging, now they're going in the same direction again. So the market has broadened out quite a bit for traders and for investors at the moment. So for me, as a swing trader, this is good news for me, because I don't have to search that much. I can almost throw
Right.
a dart and do a good swing trade now. It makes me look like a genius, but
Yeah.
it's certainly a lot easier than it was when they were diverging.
Yeah.
So,
And
but
I think
again, go
what
ahead.
I look at this and I go, this is, if Trump gets in office, chances are he'll turn the pipeline. Was it Breckenridge oil pipeline? I think it's the name of it, or
Oh yeah, yeah,
they'll
Keystone.
Keystone. Sorry, I was
Yep.
thinking two ski areas, because they're right next to each other. Keystone pipeline will open back up most likely, which is great for the oil and gas industry. And also possible, just a sort of little teaser, we may have somebody who's in that industry and has been for over 25 years come on and do an interview kind of situation with us. And I could see it really helping his business, but also the idea of pro business in the United States, which in my opinion, it's been anti business for the last 4 years. All of a sudden that gives hope. And even though the market doesn't represent the economy, it gives hope to the economy of what it could be in the next 24 to 48 months.
Well, that's true. And the interesting thing about this election, and we're not political show here, is we've had now we have two candidates, and each has 4 years of history. Well, almost four for Biden, and so you can compare and contrast. Okay,
Yep.
I look back and I see Donald Trump cut regulations. He had those big piles, and we're cutting all these unnecessary regulations. Under Trump or under Biden, we've increased regulations and we've hired 85,000 more IRS agents. And, it's just been hammering down, hammering down. And I'll show you a little bit later what that does to individual companies and what happens. But um, again, so we can see Donald Trump cut taxes. Biden's going to raise taxes. He said it. That's just the fact. Okay.
Right.
Biden or Trump wants to keep the taxes he is. The platform on their platform says that they're going to try to make those permanent, the Trump tax cuts. Okay, so as an individual, that sounds good to me. I can use my money better than the government can use their money. And I can show you studies where we waste money. And maybe we'll do a show on that. We'll go at the top 10 waste of our federal budget. And I've got those and we'll do that someday, but not
Right.
right now. We're going to talk about what's happening this week.
Yeah.
So, with all that, and then the potential for a rate cut. Okay. I mean, why do they cut rates? Why would they cut rates? Why?
Because
If everything's going good and the market is flying, why would we need to cut rates, right?
money flow is tight. So it's restricted because of the cost to borrow money, the cost of issuing credit is high, and us as consumers are drowned. We can't keep up. And so if you lower rates, you cheapen money, you put more money into the system at a cheaper rate, then that incentivizes me to go out and borrow more, maybe to buy a new home. And one of your biggest purchases is a home or a car. Well, you look at those two sectors and they're doing this. So maybe the Fed is not, you know, the Fed, I look at it and I think this Fed is looking at it going, I got to do something just to keep my legacy into some standing. But
But if you do that, wouldn't that cause inflation if everyone went out and started buying all kinds of stuff again?
oh, absolutely. So the problem is it's a catch 22. You know, if you don't lower rates, the economy shrinks. The economy loses strength. People quit buying. You're going to go through some numbers here in a little bit that'll hit upon that we're already doing that. But if they keep rates where they're at, that possibly brings down inflation, but it also kills growth overall. So it's the kind of thing, do you just kick this ball down the road and keep just lowering rates and keep playing this game of raise rates, lower rates, high inflation, low inflation, that kind of thing, get deeper and deeper in debt? Or you just let it sit and let the pain, work this out for the next, say, 2-3 years at this rate, at the Fed's, what, 5.25, 5.33% rate target, where it's at today, and just let the market work its way out to basically level things out and reset itself. My honest opinion, if they do lower rates, they'll just kick this can down the road, and it just becomes a bigger and bigger snowball that eventually goes over the side.
My personal opinion is I don't really see the advantage of having a Fed myself. And I think that if we would allow the markets to go through their cycles like they should in a free market system, recessions will come. They won't be as big as they are, but they'll come. They'll clean out the areas and the companies and the assets that are overvalued and bring them back down to earth. And that's the way the cycle goes. When we go in there and artificially try to keep a recession from happening, it always ends up as a bigger bubble and a bigger recession. And that's just my opinion. But I can show you the chart of what's going to happen. Okay, we know what's going to happen. The reason they lower rates is because something's broken in the system, and that's just the way it is. And we'll just take a look. And history is an interesting thing, but here's our chart of the federal funds effective rate, and we're going back to 1955. And you can see every time that they start, here's 57. Every time they start lowering, we go into recession. Recessions are these gray bars. So here the rate comes back up. It goes flat. We start lowering, recession. Rate goes back up. We get flat. We start lowering, recession. Up, recession. Up, recession. This was the 80s, okay? The big recession of the 80s. Came down, okay, up. We started lowering. Here it got flat. They stopped it again, went flat. Recession when they started going down. Came over, flat. This was in August of 2000, recession. Came over, there we go in 2008, the great financial. We came up, we went flat, started lowering, recession. Came up, this is the pandemic, got flat, started lowering, recession. We got the recession, or at the pandemic, lowered it all the way to zero, just like we did back here after the great financial. And this is not normal to have it zero, okay? Now, a lot of people would say it is, because, well, it's been 2008. That's a long time ago. Okay, people only know that. But here we brought it up, recession at the pandemic, back to zero. Now we started coming up because we had inflation. And what did we do? What's it been? I forget how long we've been at this rate right here, 5.33. And if they start lowering, what do you think is going to happen? Well, let's look at history. What's happening.
Yeah.
So
it's a reactive response.
Yep.
Yeah. I guess when you look at this chart, you look at what is the average rate since 1955, and it looks like where we're at.
Yeah, about 5%.
About 5%. So what's the point? What is the point of lowering rates? And the only point, in my opinion, is that they just don't want to go through the pain of resetting the system and normalizing the system. Because it's political suicide. If you leave it where it's at, people aren't going to vote for you because we're so short-minded. Rather let it sit where it's at. Filter out the things, the weak situations, the companies, those kind of things, and let it normalize. And that way we could get back into a better growth mode, in my opinion.
Yeah. Yeah, I saw it yesterday. I think the 2s and the 30s almost reinverted.
Yeah.
So again, that's another chart we could look at. That when the yield, the long end and the short end reinverts because they've been inverted for a while.
Yeah.
That causes a recession also. I mean, the signs are just lining up. Okay. Yeah. You don't have to be a PhD economist. I'm not a PhD economist. I'm a bachelor's degree economist, but I felt I didn't need to go for another 6 years to figure that out.
Right, and be brainwashed.
Yes.
Right, but I think we have to make a choice as I think citizens of this country, and that is, do we want to normalize this and create a better foundation for our country, or do we just want the next, greatest and latest thing, cheap money, go through a, bad situation, raise the rates, cheap money again, and just play this game? In my opinion, it's like you said, what's the point of the Fed at this point? They're more like screwing with the whole thing. Instead, let the market determine what it is. If you're going to use the twos, let the twos be determining what the value what the Fed rate is. Simplify it.
The problem is the Fed is fighting the Treasury Department. Okay, they're trying to fight inflation down. Meanwhile, on the other side, the Treasury Department is putting out so many Treasury bills at a higher rate, higher yield to pay for the deficits, and the government spending continues to spend. The real solution is to cut government spending and stop wasteful spending and get back into a situation where we pay for our bills as we go. When I was a kid, when we went on vacation, we didn't have credit cards. We had traveler's checks, and we paid with the money we saved for vacation. We didn't go out and spend it and pay for it later.
Oh, now you're talking nonsense, Mark. That's
I'm
insane.
Sorry.
My God, that's just
crazy. I mean, serious. But we're in that kind of a world now, because even consumers, we're seeing consumers are maxed out on their credit cards. They're maxed out on their house payments. They're maxed out on their car payments. Okay.
Yeah.
People I know that who buy and use older cars and live in older homes, and they don't take fancy vacations every year, and they pay cash for everything. They're doing fine right now.
Yeah. Well, and I think that's, I look at when I received my first credit card offer, it was Discover card, and it was my sophomore year of college, and they just handed it to me. And since there is no education around that, and there's no restrictions, that's how those companies make money. They get you addicted to just put it on the card, put it on the card, put it on the card. And it's a hard cycle to break. It's a hard, you've got, $5,000 credit line or 10,000 or unlimited credit line. It's, I can just put it on the card. I'll pay it off. Most credit cards don't get paid off. And we have created a environment where we'll just roll it to the next statement, the next credit. Maybe I'll get a big hit or sometime and paid off. And the problem is those big hits don't happen. They rarely happen. So you have to change your mindset. And I mean, I'm guilty of it. I've gone through that, and it's hard because we could become such a pleasing society.
Well, yeah, we have to be gratified right away, instantly.
And
just a story, my friend, he owns a series of fireworks stands here, and I think he had 15 fireworks stands in the little towns around where I live. And I was asking, well, how was business? And he says, oh, it was down in a couple areas, but we had some good sales. And he said, but the weird thing for me is people would come in and they would buy $300 worth of fireworks, and they give us a credit card, and the credit card only had like $100 on it. So I said, okay, run that one. They pulled another one out, so put the rest on this one. Okay. So I'm thinking to myself, if you're maxed out on this credit card, you put it on another credit to blow your money up. I mean, that's just ridiculous to me, but I'm not making any personal, just
right. But
the thing is that you can spend your money any way you want. But holy crap, when I heard that, I'm like, wow. You'd think I can't afford the whole thing on the credit card. Wow.
Well, and the hard part is, the sad part of it is there is no light going off, that says maybe I don't need to spend $300 on something that doesn't return me, return on my investment.
Right.
Right. I think about that more and more, especially when it comes to food and going out to dinner. Today is my successful trip around the sun. I'm now 55. I was asked, what do I want to do? What I want to do?
You're almost into my decade, so I will just keep coming towards the light. You'll get here.
Okay. I hope so. But I look at it and I go, for where I live, for 5 of us to go out to eat, to have drinks, to have a good time, and I'm like, what's my return on the investment? I'm becoming more and more of a tight ass about this stuff. And the thing is I cook a better steak. My wife is from New Orleans. She cooks a better meal than 90% of the restaurants I go to. And I can make a hell of a gin and tonic. So why not just stay home? Why not just sit on the back porch and save money?
Well, it's funny. It's funny you bring that up. I mean, we talked a little bit, and the retail sales came out today and they were flat. Okay, so people are not spending as much as we thought.
Yeah.
Okay, and as the market seems to show, and let's just talk about California. I'm going to pick on them because they're so easy to pick on. Okay, so in April, the fast food industry in California was hit with a $20 an hour. If you have a fast food, you got to pay everyone $20 an hour, and that made the workers happy because it's very expensive in California. Okay, but they weren't all that happy because now they're asking for $30 an hour. Okay, so what happened then? So customers, because the companies are getting hit with inflation, their food prices are are going up. They're also charging customers more for their food. And some of the companies are actually going out of business and laying these people off because they can't afford the business anymore. So, I mean, the whole fast food industry is supposed to be quick, cheap, simple, but that's not happening anymore. So, fast food is so overpriced now, people are going to more sit down restaurants if they do go out than fast food because it's almost equal now. You think about, I mean, I think there was an $18 Big Mac somewhere up in the Northeast I've read about. And then, an Egg McMuffin meal, including coffee and hash browns, cost $17.63 in California. In the past, it was $10. So it went up $7.63. And that's the cost of when somebody gets in your business and you get away from the market, you say, you're going to have to pay this, that much. Well, who pays for that? The customers. Same thing with the government and taxes. When we spend money in the government, it's on us. The taxpayers do it. So, McDonald's isn't the only chain to raise their prices. Chipotle also hiked their prices over the years. And not only they do that, they started doing some shrinkflation, which is making their proportions smaller. Okay, so customers were actually getting pissed at that. And there was a social media event that happened where people were actually using their cell phone cameras to watch them prepare the meal to make sure that they weren't screwing them out of their portions at Chipotle. Okay.
Oh, wow.
And so, I mean, it's just ridiculous. So, why is it happening? Well, it's inflation. Okay. Inflation is the main reason that fast food prices across the U.S. Are rising along with labor raise. When the government gets involved and tells you what you have to pay people, 80% of Americans are now saying they can no longer afford fast food. As a result, people's eating habits change, like you just said. I can make it at home. Why not? 62% of Americans are dining out less frequently due to price increases, and half of the respondents in this survey, especially those earning less than $30,000 per year, now say that they see fast food as a luxury item. Okay.
Wow.
Think about that. Okay. Think about how that changes for people. We already know 65% of the people in this country live paycheck to paycheck. Inflation is killing them. But we're starting to see a little bit of a crack too on the upper level too. Hugo Boss, which is a high-end luxury German clothing manufacturer, they just slashed their full-year outlook and cited demand for luxury goods due to persistent macroeconomic and geopolitical challenges and mounting headwinds across two key markets, mainly in Europe and China. They warned that the financial outlook for 2024 faces persistent microeconomic and geopolitical challenges that are dampening global consumer demand. So even the high end is starting to get hit. And so again, we've got governments going in trying to help instead of letting the market run its course. I'm going to tell you have to pay what you pay. That's just okay. Now you just increased my overhead. Now I saw just recently the Biden administration Monday, they want to impose, if he gets reelected, a rent control that you can only raise your rents every year 5%. Okay. Well, 5%, that's inflation. Okay. I think, what was it? In June, rents went up year over year in June just by 3.5%. So what he's telling me is, you got another 1.5%, you can raise rents. So the market's already only raising it to what the market can handle. Right. And if you start doing that, I think there's buildings in New York City right now that are going to go under because they're buildings that have these rent controls in them. And now their financing is coming due, and it's going to be at a higher interest rate. And we even talked about this, I believe, in one of our Zoom calls with a commercial real estate guy, and said, so they're going to have to pay more for the building, but they can't raise rates on anybody because it's a rent control situation.
Well, and
So again, go ahead.
You think about that. You can only raise rent 5%. Okay.
A year.
A year. Okay. So the cost, it is the probability of the cost rising faster than 5% is very high, right? So if you're a landlord in New York, you already see that. I suspect you'll see it all over the place if this actually gets through, which I doubt will happen, but weird things happen. All of a sudden, the cost to be in real estate, commercial or multifamily, all of a sudden loses its appeal. So what happens if multifamily, companies are actually in the losing end of it, which I think their target is like 13% net on an annual basis on their return, right? And so if all of a sudden that drops to 8, 5, what's the point of being in that business? And then what? Then what happens? I can't run this apartment complex, 200 unit apartment complex. So I'm out. I file bankruptcy and the thing closes. Where do these people live? Right? It's just a snowball effect. It's like when you cap somebody's ability to make a living, the cost is going to exceed their ability to pay. So what's the point of doing it?
We've been through it in the 70s when Nixon tried to do price controls on food and everything. It's just a disaster. Okay.
Yeah.
You can't do it. You're going to put businesses out of business that are key businesses in the food industry, the housing industry. And before you know it, everybody's going to have to rent from the government, because there will be no companies left.
That's it. You think about this whole, employment. They say the employment of people are being employed. Well, the biggest employer in our country is the U.S. government.
Absolutely. Right? And the biggest landowner.
And the biggest landowner. So if the idea is socialism, a push, kill democracy, this is how they do it. Put rent control. Well, it's no longer profitable to be in real estate. Well, we'll take it, we'll own it, and we'll control it. Well, now we're all become more and more dependent on the government. And I think that to me is, seeing what has happened in the last 4 days, and the markets are rallying now because what it's, I believe, looking at is, okay, Trump gets in, we get back to a capitalist environment, businesses can survive, thrive, people can start building wealth again. Whereas if Biden gets in, you become more and more government.
Right. I think so.
Not to be political, but
no, but it's true. The more that they get involved, we just show when they get involved with wages, what happens. Okay. Yep. Now you're getting involved in rent control, what happens. Okay, so here's John Deere. John Deere, a couple Fridays ago, announced it's going to start laying people off. Over 600 people at 3 U.S.-based John Deere plants were notified that by the end of the summer, they'd be out of a job. As per the company's latest decision, around 280 jobs will be terminated from a plant in East Moline, Illinois. In addition, another 230 employees working at a factory in Davenport, Iowa, are also being let go. This is in addition to another 100 production workers at John Deere's plant in Dubuque, Iowa, who are also being impacted by the layoffs. The 2 Iowa factories are more focused on construction and forestry equipment. The company said all the layoffs will be affected from August 30th. And that's rural America. People need jobs here in rural America. So I wouldn't say that they're the highest paid people. That's why they put their plants here. Right. So the company said these changes are being made due to reduced demand for the products produced at these facilities and to better position John Deere to meet future demand. We continue to take proactive steps to reduce production and inventory. Among following agricultural revenue in the U.S., Deere has set out to reposition its brand as a technology company. They announced they'll be shifting production of the skid steer loaders and compact track loaders from Dubuque, Iowa to Ramos, Mexico by the end of 2026. In a statement, the company also explained that decision was because of its evolving business model to tackle rising manufacturing costs and improve operational efficiencies. So we had a point 4 years ago or over where people in factories were actually moving back because the regulatory environment was easier. It was getting better to come back to the U.S. And then over the last 4 years, we see that that's not the case anymore. So money and production is going to go to the place where it's most valued and it's most, most efficiently used, and that's what we're seeing. So, I mean, John Deere, again, I'm gonna be honest, reported slumping year-over-year revenue after a net income of 10.6 billion in 2023, but now executives forecast the company's 2024 income to be approximately 7 billion, so down from 10.16. Wow. The reason given, including higher production costs, lower shipment volumes, so that's the economy, higher production costs is the inflation, and unpredictable weather that made customers think twice before purchasing equipment. Okay, I don't think it's the weather. I think that's just something that they said. But so again, and I think the regulation in there on these industries also, plays a factor. But in defense, not in defense of Deere, but on the other side, you can look at John Deere, and they spent more than $7.2 billion on stock buybacks in 2023 and $1.4 billion in dividends. So it's not like they couldn't have used some of that money to keep these open, but their job is to be in business, to make profits for their shareholders. That's their number one job as a director or a CEO of your company. And that's what they're doing.
Yeah. Well, you think about the whole textile industry and how it moved out of the South and out of the United States and moved to China. And it was because it was cheaper to manufacture than it was in the United States. And now, they had the CHIP Act. They're trying to bring, manufacturing of semiconductors back into the country. But you're driving other, really what I call foundational businesses out of the country, like John Deere, who make the tractors, who do the farming, who provide, the product that helps build infrastructure, feed our families. And you're pushing them out of this country because the cost of doing business and the regulations to do business. I mean, I look at this and I go, if there is a poster child of not what to do, it's California. You look at their governor and what they're advocating for and what he's advocating for, and it's killing that state. I mean, I think I showed you the T-shirt design that I'm thinking about putting up, and it's, I live in Florida. We don't want that politics in the state of Florida. We don't want it. Texas, same way. They don't want that politics because it's killing that state. And that's a beautiful state. But yeah.
I've lived there twice. I've lived there twice. It is a beautiful state. But, if you can't afford to live there, you're gonna use your feet and move. And this country was developed not to be run by a federal government, all knowing. It was to be a bunch of states together with the federal government over the top, so that if a state wanted to be a laboratory for trying something new, and maybe it's in environmental policy or it's in production or in wages, they could do that. And if somebody liked that, they could go move to that state and enjoy that. If somebody in that state didn't like it, they could move to the next state and have that. And that's the way it's supposed to be. And now we've got a government that's trying to be all inclusive and forcing policies on everybody.
Yeah. Well, and I look at Tennessee. I remember when Alliance Bernstein, which is a investment company, mutual funds, that kind of thing, moved their headquarters to Nashville, Tennessee. And the reason is they don't have state tax. They're much more in favor of business. And now we're seeing that in Florida. We have seen a lot of financial institutions move from New York City, where it's costly, and they're moving here. They're moving from Chicago, where it's costly. The taxes are ridiculous. They're moving here. I had a conversation yesterday with a friend he's based in Cincinnati, Ohio. His wife is a traveling physician's assistant, or not physician's assistant, but a nurse anesthetist. And she's in Montana right now, and she just signed a 2-year contract. He says, we're thinking about just relocating, making it a permanent shift because they don't have state taxes. He said, whereas Cincinnati and Ohio in general, he's like, we're getting hammered every day. He goes, it's just so damn expensive.
Well, went over. Jeff Bezos moved to Florida, and he sold a bunch of stock, saved $1 billion in taxes.
I mean, come on. And I think that's where I look at this and I go, one, I think Reagan, if I remember right, Reagan was like, all about less government and just do the basics, provide the infrastructure, let capitalism work its way, build this country, and it did. Especially after the whole Paul Volcker and raising rates through the roof and all that kind of thing. I think we're in that environment again, where you're going to have a bigger migration move from these very liberal states like California, and this government, jumping in and controlling everything and making it hard to do business. And I look at, what the Dow Jones is up 578 points today. Like, when's the last time? I mean, that's 30 stocks, and they're all what I would call a better basket of representation of what we use. And now the Nasdaq's going down is negative 32. Yeah. Are we seeing that rotation happen in the markets? And then will that translate into the economy, especially if we see a change in administration in the White House?
At some point, it will, because our economy is consumer driven. 75% of the economy is consumer spending. So as we see, the consumer is starting to be more picky and not spending because they've extended themselves so much. And when that slows down, business slows down. We're already seeing it. John Deere. Okay, we're moving. Okay. Other companies are laying off. I mean, I could pull up a whole list of companies that are laying, even the big tech companies are laying off.
Yeah.
Okay. So everyone's getting more trimmer, and when that employment rate, which we're seeing, went from 4 to 4.1%, even though more jobs were added, even though we looked at them and they were more part-time jobs, we looked at that last week. Right. I mean, it's enjoy the ride while the ride's good, and the trend is your friend. And it's great for us in swing trading. We're having a great week. Had a great week last week in swing trading. It's a lot. I told you earlier, it's a lot easier for me to pick a stock. It's almost like a monkey throwing a dart at the board now, because now the market is a broader market for the last 2 weeks. More stocks are going up. You can look like a genius. It's harder when they're not, and we'll see.
And we're seeing that trickle down to the whole market, not just tech-driven stocks. It's getting into healthcare. It's getting in consumer, staples and that kind of thing. So it makes a more solid market, but it's based on this whole paradigm shift that I think we've seen in the last 4 or 5 days. So
and we'll see. I mean, it's earnings season, so we're starting to see earnings come out. And, you're seeing the banks. The banks are not making as much on their interest income. You're seeing the banks putting more money aside to pay for bad loans. And so we'll see what happens. And those are forward-looking signs to me of what they're thinking. Okay.
Yeah.
So read some of those things and look at more than just our revenue increase. Look at actually if the net income increase and what's the margin, of their profits. What are they doing? Are they laying people off? Is that where the money's coming from? Dig into it a little bit if you want. I look at charts. Charts keep me where I want. I set stops and I get out. Okay.
Yeah.
I'm not going to write another one down. I've been through too many, 87, 90, 2008. I'm not writing another one down.
No. And I think that's the thing is that you get older, and our, subscribers are in that, 50 to, 80-year-old range. You don't have as much time to recover. And I think that, this brings up something you posted on the Discord the other day about the principles of swing trading. And I thought it's awesome, because most people who are investors don't have a process, and they don't have principles for which they work from when it comes to investing. And when you see success, like we have with our tribe members, they're having success because they've been taught how to build a process, and then they have adapted that process to their personality.
You want me to share that?
Yeah, absolutely. Yeah.
So we have it on actually it started on the Discord. I believe it was Saturday or something. And one of our members, Paul, he's very active and he's very good at swing trading now. He does very well. He put out this reminder, and he said, you don't make money or lose until you sell. When the price action is high, sell it. You can always buy it back. Number 2, sell your loser stocks. Number 3, never fall in love with stocks. Number 4, have fun with the money you make, which is cool. Yeah. And then he said, did I miss anything? So I got on and I added a few things, for Paul. I said, number 5, have a trading plan and follow it. I really believe in that. You have to have a trading plan. Number 6, know your potential risk reward on every trade. Number 7, be patient. Let the market come to you. Don't force a trade. Number 8, you don't need to be in the market every day. Some people do. They think they have to be. Number 9, when in doubt, sit it out. And then I do have trading guidelines that we have on the Discord, but I have 7 principles for successful swing trading that's right underneath the trading guidelines. Yep. And they're pretty simple. Educate yourself, learn about the stock market, technical analysis, and risk management. Read books, take courses, and study the markets. It's up to you to be a good trader or investor, okay? If you leave it up to someone else or you just decide, somebody on CNBC said, buy this stock or that stock, remember, they're trying to get you to buy it so they have it. They're trying to get out, right. And they want a higher price.
Right.
Start with a plan. Develop a well thought out trading plan or investment plan that outlines your investment goals, risk tolerance, and strategy for achieving these goals. Develop your skills through paper trading. So have a plan and don't start with your own money. Take some principles in paper trade. So take a fake account. So I'm going to put $10,000 in it and just see how you're doing week to week. Use your strategies and adjust your plan. That way, you're not losing money during your learning process. Keep it simple. Avoid overcomplicating your strategy. Stick with a few proven techniques and avoid jumping from one method to another. A lot of people do that. They try to go to the next indicator or this or that, and before you know it, their chart looks like the radar at O'Hare Airport. It's like, oh my gosh, there's just so much going on.
Right.
Here's an important one: manage risk. Use stop loss orders to limit potential losses and preserve capital. Consider using position sizing to manage your overall risk exposure. I get the biggest comment people tell me is my biggest problem is I never knew when to sell. Okay, and then if the price went down, I would always hope, there's hopium, that it would come back up. And if I got to even, I would sell it again. I'd sell it. And then next thing you know, you're down 10%, then you're down 20%, then you're down 50%. It takes 100% to get back to that level. And it's frustrating. So that's what we mean there. Stay patient. Swing trading requires patience and discipline. Avoid making impulsive decisions and let your trades play out. Now you've kind of told me you've kind of learned on this one, haven't you? Got to be more patient and
yeah. So I have not been the best trader investor. I take an enormous risk and didn't manage risk well. But ever since joining Kerry and Mark on this journey with Best of U.S. Investors, I've become more and more realizing what I know when I look at charts and learning to interpret them in a different way. And I made the statement, I think last Friday on the Platinum call, I would like to get myself to a point where I only made 12, 13 trades a year. And it matches my personality. I want to identify incredible opportunities. They're going to have incredible runs, but more importantly, be so patient to wait for them to to set up and get the right setup. And I think that's one of those things that, there are a handful of guys on the Platinum channel that trade every day, and they sit in front of the computer and that's what they do. But that's perfect for their personality. It just matches up and they have good success with it. Whereas for myself, I'm much more of, I want to use my knowledge. I want to use what I've been taught, from you, Mark, and match that up for that big win. And I think we have seen a couple guys on the channel who did just that with NVIDIA, SMCI. They identified the opportunity back in October, and they've been in that trade for a while. And now you're starting to see them unwind that because they have made over 100% on their money. Those are the kinds that matches up for me. But I think that's the great thing about this is your personality. You can design a process that matches you and you become successful because of that.
Yeah, exactly. Yeah. And that's we don't tell people where to trade or when to trade or how to trade. We just set up, we have a model process that I've used. It's simple, works for me. People look at it. They ask a lot of questions. What else can I do? We answer those questions, and then they design their own, trading plan, and they can get on the platform here, the Discord, and ask questions, and that's how we go forward. And you learn, and you learn to manage your own money, and you
Yeah.
learn to take control of the opportunity costs that you might lose if we go into a 12-year slump, and
Right.
you're 4 years out on retirement. You're like, oh my gosh, now what am I going to do? I got to go be a greeter at Walmart. Not that that's a bad thing, but it probably wasn't in your plan.
Right. Whereas if
Other
you
things we go
go
ahead,
ahead.
go ahead.
No, go ahead.
I just say other things. Keep records. So I keep records, and you can go. We have a paper trade portfolio, and that's kind of an example of a record keeping thing where you can see what the trades where we would have made trades and get in and get out. We have winners and we have losers, and you can analyze your losers and your winners. What did I do right? What did I do wrong? And then
Mm-hmm.
at the end, if you have questions, seek professional help. Financial advisors, tax professionals, our Discord. We have a lot of people, and from all walks of life and all
Yeah.
different backgrounds that we get together every week on Friday, and we talk about all this stuff. And so again, successful swing trading requires patience, discipline, and a thorough understanding of the markets, and that's what we try to do here. So those
Yeah.
are just the principles of trading. I'm sure we could add more if we wanted to, but I try to keep it simple.
I think that's I think a very good important point is keeping it simple. Like you said, you could put a million indicators in there and all of a sudden it becomes really confusing.
It
But
does.
but through education, practice, through a paper trading account, you can figure out what works for you. And eventually it tells you what kind of investor or trader you are. I think the word trader gets a bad rap. When you tell people you're a trader, they're like, oh, you're a day trader and you're sitting there sweating it out over every second of the day. No, there are successful traders who trade on a 36-month basis. Prime example is Michael Burry. He he had a 5-year, I think a 60-month outlook of where he needed to be prior to the great financial crisis, and he killed it. But he set that trade up uh, like 3 years in advance, and of course it was painful for him. But what it tells you is that word trader can mean so many things, and it can be very insightful. You just got to figure out how it relates to you and how that label,
Yeah,
settles
yeah.
with you.
Some people trade the daily, as a swing trader. Some people they trade the weekly or they trade the monthly,
Yeah,
and whatever works for you. And that way, I only have to look at it once a month or once a week or once a day, and
yeah,
we use stops, and limit orders. And so you can go out and cut your grass or enjoy a margarita on your deck and
right.
let the market play between your, whatever your tolerances are,
Yeah.
your risk is.
You had one other point, let the market come to you.
Yep.
So I put on a limit order today, and it is sat there for a couple hours. I haven't gotten it. Went in just as we were talking and canceled it because it's not what I thought that position was going to do isn't doing it. So I need to step back and go, okay, maybe I'm completely off my rocker on this. I need to go back and look at what I was thinking at the time and reassess that. Um,
Yep.
there's always a stock to buy. There's always an opportunity. You just got to be patient and have a plan to make it happen.
Yep.
Yeah.
I mean,
So,
I go in, we put in a watch list. I try to every day I try to put some on the watch list. And some days I don't have any because the market doesn't provide me any.
right.
I don't push it. And then on the Discord, a lot of people go out and they find their own and they'll put it on the Discord. What do you think about this?
Yeah.
And
I did
so
that
it's
yesterday.
yeah,
Yeah.
exactly. Yep.
Got on the chat. So there are a couple features on the Platinum channel that I think is important to point out. One, you do a market news every morning. That goes out to everybody even if you're just a free subscriber, everybody gets that. And then we get into charts of interest. These are charts that you really like and you have an interest in them, but that only goes out to Platinum subscribers. And honestly, that's the only subscription we have anymore. We just have one subscription, that's the Platinum. And then you have the daily watch list. And I thought this was interesting because you update that on throughout the day. Is that correct? Isn't that correct?
I usually do it at the end of the day. It's all updated. Yeah.
Okay.
Yeah. Because again,
So
I don't sit here and just watch. I'm like you. I got different things to do. So, I set it up, you put in your stops and your limits, and you
yeah.
go live your life.
Yeah. And then throughout the day you can go into Platinum Chat. But our new feature, Platinum Live, which I think is becoming the more powerful element, is where you can log on and you can converse and through video with other tribe members. And we typically see, quite a few people pre-market jump on there. And then as the day comes to an end, we see that also increase. So it creates community, it creates ideas, people share ideas, we have discussions. Oftentimes you talk about just different techniques, how to reading the charts. So it becomes educational as well. But those to me those are what, four things on the Discord that I think if you're a subscriber and you're not in that, or participating, you definitely should. If you're having a hard time getting into it, let me know. You know how to contact me. But also for any future subscribers, this is where these ideas and learning really take off, is in the Discord, in those categories, in those categories that I just listed. So very exciting.
Yeah.
So
But we're
Mark,
just
tell me. Go
go
ahead.
ahead. No, you go
No,
ahead.
I was going to switch the subject, but go ahead.
Nothing. Go ahead. I want to hear yours first.
Why is gold going up in price?
Oh,
Why
good
is it at
question.
record high? Why is it the news CNB says gold jumps to record above 2,460 as an ounce on hopes Fed will soon cut rates? Isn't buying gold a defensive positioning?
You would think. Just like Bitcoin.
Just like Bitcoin. Bitcoin's up, what, 10, 15% in the last couple of
Yes.
days?
$64,300 as we speak on this video.
Wow.
It was
Just
like
last
what
week it was in the
a week
50s.
ago is 52,000.
Yeah. So are we seeing a rotation to risk off asset classes like Bitcoin, like gold, because there is a chance the Fed is lowering rates, and that is an indication of a recession? Is that how we should interpret that?
Quite possibly, yeah.
Yeah.
Gold goes to where the value is, and if they believe that a recession's coming, they're gonna hide out where the value is.
Yeah.
And then again, if we start seeing the yields start, messing around a little bit, watch the TLT and the long-term treasuries.
Yeah. It's not always, they make it sound, the 10 years down 0.045% down to 4.18. So people are starting to go to risk off assets. So the news, I think, can be interpreted in very skewed way, in that, oh, he's going to lower rates, that's great. Whereas the smart money is now looking for risk off, because if he lowers rates, historically, you're headed for a bad time.
Yep.
So anyhow, all right. What else? Well, anything else you got? You want to hit
nope,
on?
I got my regular guy hat picked out to me today is Coal Electric Company. They're just a bunch of regular guys out in the middle of nowhere who do electrical work for people. So if you're just a regular guy, you want me to wear your hat, send it in, I'll wear your hat. So
yeah. And yeah. I'm down here on 30A, which is in Florida. If any local businesses would like me to sport their hat, please get it to me, because I, of course, need a hat in
send
this
two,
hot
send
sun.
two. We'll each wear one.
There we go. Sounds good. Cool. Well, Mark, I think this has been pretty informative, and definitely check us out. If you have any other questions, feel free to reach out or leave some comments in the comment section. Hit the subscribe button. You can always go to bestofusinvestors.com. We have a 14-day free trial of our program, so you could test drive it and get involved. And in the meantime, we'll see you next week. So have a great day, have a great week, and peace.
And
cut. you.